Good morning, good evening, good afternoon, pattern watchers. What's going on, gang? How are we today in the crazy crypto world? What's good, ladies and gentlemen? What is happening, ladies and gentlemen? Check my Twitter comments. I'm actually seeing some interesting behavior on Twitter and what people are saying. You know, it's really bad. It is really bad what's going on Twitter, man. People like all moon boys, all the shillers and what have you. You know, no one is appearing anywhere. You know, no one is saying anything. But this is the thing about this stream. Because we don't care about price, We have no bias to direction. We trade what we see. We trade what is. So we don't get caught up in, oh, I'm not going to go live because price is dropping. Nah, man. We go live when it drops. We go live when it rises. We go live when it's flat. We go live when it's closed. Okay? Because we're pattern watchers. That's the name of the game, ladies and gentlemen. Now, if you are new to the stream, mad love and respect for passing through. I welcome you to the New York session, where we like to work out what Bitcoin is going to do later on today. New York starts in 20 minutes, so let's roll with the flavor. Be sure to like the stream, ladies and gentlemen. It's free of charge to do, and it just plays with the YouTube algorithm. Let's pump the algo, as they say. Welcome to Traders Reality, ladies and gentlemen. Let's have a conversation. So, what has happened? What's been going on? It seems like everyone has had a little bit of a shake on the head. Yeah? It seems like everyone is like, oh no, what happens next? What's the story? I will say this to you now, ladies and gentlemen. Please, please, with the utmost respect to all of you, be very cautious about buying the dip. I did a video on my channel talking about buying the dip. Do not make the mistake of thinking that now is the time to get involved in buying the dip. How long is the dip going to be a dip for? That's the first question, okay? Do your own research. Have some diligence about yourself. Be accountable and responsible for your decisions. At the end of the day, it's your hard-worked, earned money that you are putting up for grabs, okay? Remember, the game of trading is about traps, all right? Do not get caught in the common herd behavior, because that's why price moves the way it moves, because it's a reflection of people's behavior. Now, we got loads of other things that you could consider into the idea of why this actually happened. Well, the basic version of why this has happened is because we're at a cyclical move from the M pattern at the start of the year. Okay, this was, well, just towards the end of the year. M formation, drop level 1, drop level 2. This is no surprise to anyone that comes to this stream. This is a cyclical move to the downside, ladies and gentlemen. They have fulfilled the obligation, trapped the liquidity to the upside when everyone was hoping for 100k, or actually making the statement that they wanted 100k and it was going to go to 100k. Nah, not here, guys. They were formulating and preparing the trap, and they did just that. Drop level 1. Even in this range right here, a lot of people were drawing off any support and, you know, TikTok support and resistant points, trying to work out that this is going to be the zone that Bitcoin's going to bounce from because it's holding this area. It's hit it once, twice, 3, 4, 5, 6, 7 times. Okay? No, it's irrelevant. There is an imbalance in the chart. It's right here. It's the wick. They always have to come back to the wick. And they always do come back to the wick. Let's go take a trip down memory lane, ladies and gentlemen, so we can start talking to you about certain wicks that you may be familiar with. Do you ever recall or remember the El Salvador wick? Anyone remember the El Salvador wick? It came straight back to it. Funny that is, isn't it? Let's go back again. Look at 28,000. Do you remember when Bitcoin was all the way at 28k? When it was on its way towards that zone? Where was it? Look at that wick. Right there. Where is it? Hold on. There it is. Remember that? The good old wick at 28k, which filled the gap from the previous move to the left. They came down to it. They fulfilled it. Look at that, to the T. They came down and hit the wick. These are the imbalances in the charts, ladies and gentlemen. They have to come back to them because that's where they triggered the most amount of orders. Think about it. Look at how the wick was created. Orders were placed at this point. This had to be a place for orders in order for it to become a wick. Then they snapped it all the way back up again. The same holds true to this current move, ladies and gentlemen. Whoops, where are we at? The same holds true here. Would you have been able to know the difference between the two if you got rid of price and you just put this image and then the wick at 28k? Would you have been able to really tell the difference? Not really. They're just doing exactly the same thing. And that's the thing about trading, ladies and gentlemen. That's the thing about the business model. It doesn't change because human behavior doesn't change. Many skeptics out there do talk about the idea, no, there's no such thing as psychology in the game. Well, let's understand something. Before you can buy something, someone has to sell to you. Before you can sell something, someone has to offer it to be brought. At the same time, you have to understand what motivations do people have to come and commit liquidity here. People don't do this just out of because they're being told to do it. There are motivations at play. Look what cryptocurrency stands for. Yeah? Look what trading, speculation, financial markets, what do they stand for? Money. And it's about people coming into this arena and trying to take what they think they can get from this marketplace. Fair game. You come to the game with good intentions. Happy days. I applaud you. I respect that. And like everyone else that comes to the game of trading, they're always in it because they've got good intentions. But that doesn't mean you're going to make it unless you understand how the business model works. There's a reason why price comes to the upside. It's not no other indicator other than price. I don't care about any other indicator, no TDIs, no RSIs, no nothing. They are just there as a confluence measure, just to sweeten up your confluence, your decision behind why you think you should go long or why you think you should go short. Guys talking about buying the dip right now, does it look like it's a spot for you to be buying the dip? Remember, the idea of buying the dip, ladies and gentlemen, is based on the idea. Now, from a holder's perspective, it's a different story right there, because a holder is the enthusiast. He's the guy that will always want to get Bitcoin at a cheaper price. Okay? So for a holder, it's a different story. But for the average Joe who's stepping into the game of trading or trying to take advantage of buying Bitcoin cheaper, you really want to be careful, because we've just had an explosive move to the downside after a long time consolidating in this range. We've already recovered the majority of the wick, and there is still some more ground for them to come to. In front of you, you can see we've got ourselves what would appear to be a potential pattern formation in this area. Okay? Now, there's speculation across the board. People talking about Bitcoin to 30K, Bitcoin to 29K. Frankly, it's irrelevant. Right now, we're at 42. And we need to wait and see if we're going to get things back into the fray and they're going to regulate price and bring it back towards the 50 EMA. But Bitcoin does have a habit of just going through with the continuation to the downside. Bitcoin has actually achieved an average daily range move to the downside, which is consistent with what it normally likes to do. Okay? If you take the move from here and then you take the move from here, it's usually around about the same. The deeper the move, whether it's to the upside or to the downside, the sooner we're going to see a little bit of a correction or retrace back up into the fray to get the game rolling again. So by principle, we would be expecting the following. We would expect price from this point to try and come back up, at least test the 50. So if you are buying the dip, ladies and gentlemen, you'd be getting involved in this area here when they're expecting a retrace back up. You would then be committed to keeping your liquidity in the trade. What happens when it starts to continue to pull back down again? Are you going to get involved and start buying the dip yet again? You need to wait, ladies and gentlemen. And I'm sorry to be the bearer of bad news here, but don't fall for the hype. It's not ready yet. Let's have a look at the Bookmap. Here's the Bookmap, ladies and gentlemen. Bitcoin's Bookmap. We've been paying attention to this bad boy. Look at that, 42K. There is 570 Bitcoin at 42,000. We got 123, well, 180 around 42,800, and then 42,600 is 147. But the notable area has 42,000 is 570 Bitcoin. Does that mean price is going to go there straight away? No, not necessarily. As I said before, the Bookmap is all about the auction between the limit buys and the limit sells at this current point in time, where the liquidity that is present in the order book, which is on the hard right of the chart, okay, and the orders that have been sat are on the left side of the chart. The relationship is trying to work out the battle between who's going to win at each point in time. As it moves towards certain pools of liquidity, you're then able to understand the commitment of the limit buys and the limit sells. Okay, so just please really, just be very cautious about buying the dip. 829 Bitcoin at 40K, 400 at 41. There is liquidity in the charts, ladies and gentlemen. So could you imagine if you were buying the dip now and it goes to 42 and then it goes to 41 and then it goes to 40K? What about your liquidation point if you're leverage trading? Yeah? Are you going to be able to withstand sitting through that drawdown? You need to wait. We've just had an explosive move to the downside, which has fulfilled the level 2 drop to the downside. We are naturally expecting another move to the downside to formulate the level 3 zone. Okay? Because as you can see, there's nothing else for them to take other than this area down here. This is where the nominal interest should start to come into play. So please, ladies and gentlemen, be careful when you are doing it. All right? Don't fall for no hype on YouTube. Don't fall for no crazy thumbnails. Don't do it. I'm being straight with you all. Okay? Straight up. If you're going to go and just make an impulsive move at the fear of missing out, well, you really want to ask yourself, what made you feel that way? Yeah? Have it in the back of your mind, man. Have it in the back of your mind. This game isn't about trying to catch the dip, okay? Who cares about what you catch? At the end of the day, all that matters is when you put your money into a trade, do you pull out money and some? Do you make a profit? Because at the end of the day, no one cares. And that's the truth, ladies and gentlemen. No one cares if you do make a great profit on the trade. No one cares, all right? Because when all is failed and everything's dropping and tanking, no one cares about anyone winning, all right? Everyone's all on the same page. And that's what I'm trying to get you guys to come away from, all right? When there is chaos like this, you know that there is something being set up. Let everyone start screaming and shouting with the wide open mouths on thumbnails and what have you. All that crazy stuff. We're traders here. We're realists. We see price for what it is. Okay? And I hope you guys feel the same way. Good afternoon, New York. What's good? Nice sip of the coffee. I hope everyone is doing well. Who's in the room with me today? Who is in the room with me today? What have we got? Kevlar, how you doing? Alan, Peanut, Oko, oh you know, how you doing? Who else we got? Anybody new today in the stream? Welcome to Traders Reality, ladies and gentlemen. Yeah, listen, this hashtag, the hash rate and this thing about Kazakhstan, all that nonsense, to be honest with you, it's just an opportunity for them to exploit price action. Let's look at this. Look at the futures estimated leverage ratio. We've been looking at this for quite some time, and I'm going to be doing a video very soon, over the next couple of days. I'm going to be doing a video which is going to talk you through all of this behavior. All right, I'm going to break it down. I'm going to pull up videos from previous streams where we've spoken about we're expecting the wick to be realized. We're looking at price action, the failure of the 800 EMA. I'm going to get this video. It's going to be about 25-30 minutes long, but it's going to give you a working practice of how to work out the behavior of Bitcoin at certain zones, all right? And once you watch that video, you'll start to become familiar with all the concepts that we're discussing in this stream, all right? Because at the end of the day, for me, I enjoy doing this. I like watching the charts. I set up my positions. I place my trades. Happy days, okay? I'm cool. But there are people that come here for guidance, all right? And the guidance that I'm trying to give people is to help them understand the nature of the business, all right? Because it doesn't change. And that's the kind thing that the market maker has been for us. He's provided us the means to an opportunity to really join his coattails when he's making a run for profit when everyone's waiting for 100 grand. Yeah? It's frustrating, man. It's weak. It is weak. The amount of stuff that's out there. Terrible. Unbelievable. We've been waiting for this move to happen for a long time, and I've stayed loyal to it, and everyone's been waiting for 100K. Unbelievable. There was no reason to think that. Well, there was no reason to think of 100K. Why? Well, just first things first, go on to the daily time frame. Just before Christmas, Bitcoin couldn't even get above the 50 EMA, so why is 100K coming into the conversation? Oh, September 2021, yeah, Bitcoin is going to do exactly the same. There's no guarantee of what happened before is going to happen again. There's no guarantee of it, but that's what people rely on because they don't know otherwise. No one knows. There's no guarantee that Bitcoin's going to bounce from this point, but there's also no guarantee that it won't. Welcome to trading, and that's the truth. But when you focus closely on the way they actually behave, they seem to be doing the same thing over and over and over again. Let's just look at the charts. Look at how many times they pinned the 200 EMA drop. M formation, 3 hits to the high, market maker's presence, drop. There you go. 1, 2, 3 hits to the high, drop. Like, how often do we need to see it? W formation, shift out of the zone, 800 EMA confirmation, rise up, level 1, rise level 2, rise level 3, peak formation, drop. The process is exactly the same, ladies and gentlemen. The idea is how often are you going to get into a position to exploit it? And that's going to be all down to your understanding of how it operates. Now that we've got this retrace potential that is forming, we've got the M2 pivot point that looks like it wants to hold, okay? We need to wait and see if price is going to come back up and test the 50 EMA. And it has a habit of coming back to the 50 EMA, but it's what it does at the 50. So people are, you know, most likely getting caught out right now and following nonsense where people are saying, buy the dip, buy the dip. What do you know about buying dips, bruv? What do you know about dips, man? They ain't finished yet. Everyone now across the board is looking at buying dips. Guess what? You guys are the liquidity. Market maker's going to realize his shorts. He's been building them long enough. Just look at the range that they've broken from. Spent all this time in this area and they've only achieved from 45,000 all the way down to 42,300. You think that that's all the amount of money that they're aiming to get from holding this range for so long, building shorts above this key notable area? Nah, man, come on, man. You're trying to tell me that the market maker is being polite. He's being charitable. He's letting people take care of their profits now. Get out of it, man. People talking wet, man. It's unbelievable. The game's not done yet. The move is not done. And if Bitcoin can bounce from this point and go shoot up, happy days. Get over the 800 EMA, then we'll have a conversation. But there's too much pressure to the downside. Too much. They've spent too much time in this area. They need to realize a return. We're in a cyclical play right now. So all I'm saying to you guys is proceed with caution. That's all I'm saying. Because people can get caught out in the dip. I hope this is the point that Bitcoin can go and make a lovely move to the upside. I welcome that. But we also need to be realistic as well. And you need to be realistic in your expectations. If a lot of people are talking about buying the dip, it's probably not the dip. Yeah? It's when people aren't doing it. That's when it starts to happen. Why? Because the market maker needs people to start doing things. So he creates the environment for it to happen. Why do people commit money in the first place? They need a reason. They need an indicator. They need a thumbnail. They need a motive. They need everything. Each candlestick is the result of the market maker inducing traders to step in and provide liquidity. Look at how much liquidity. Look at this. The exchange of orders. Look what's going on right here. You can see how many transactions are happening at the same time, ladies and gentlemen. Money's always coming in. Anyways. Okay, look. Also, let's actually have a look at some altcoins, man, because I've chewed your ear off too much. Enough is enough. Let's actually have a look at Ethereum for the time being. I'll tell you what, hated hero, the only reason they'd be kind enough to give you profits is so that there's more for them to take back off you when it's time to move it. You know what, as Eminem said, you know, I had to give you a career to destroy it. That's exactly what the market maker's about. He gives you profits so there's more money for you to take, for him to take after. Okay, Ethereum. Oh, there you go, ladies and gentlemen. I'm sorry to all the Ethereum guys who were saying it would never recover the wick. It's done more than that. How unfortunate is that? Yeah? It's done it. That's scary. Why hasn't Bitcoin recovered it just yet? Who knows? Ethereum still got pools of liquidity in this range. Right there. There's a zone right there. And then there's a zone right here. This will be the most nominal point in the chart. This is a clean drop, okay? That's why I'm saying be cautious with the buying the dip. You really want to start getting involved in dips, ladies and gentlemen, once they've established a trend change. Yeah? Let price do its chaotic behavior like so. Then it starts to come up a little bit. Okay, that's cool. Because you need to understand one thing. At this point right now, you're not buying Ethereum. At this point, you're not buying Ethereum. So why are you buying it here? Why don't you just buy it at the same point you wouldn't buy it before? Because it's actually now managed to come back up to that zone. And it's showing promise. You buy the dip as the dip's already continued. Now we're coming back up. That's where you buy the dip. All right? To all my guys who trade stocks, the cup with handle formation. Yeah? You wait, price is dropping, volume starts to dry up in this area, now it starts to come back in again, they drop it, shake out the weak traders, and then bang, up it goes. Why would you buy the dip? Here, and here. Now, if you're a market maker or you want to trade like the market maker, you start building your longs when price is dropping. But you have to be prepared to be in the red. Are you prepared to be in the red? Or do you want to start going long and realizing a profit straight away? So why would you buy when price is dropping like now? If you're looking for a dip, you wait until they've established the move to the upside, which we look at it and see it as a cup with handle, when in principle, it's simple. Just wait for the pattern to arise. That's all you're waiting for. Hit them with the rise, retrace, continuation to the upside. 2 entry points. You see how it is. Yeah? I hope that makes sense to you, ladies and gentlemen. I really do hope it makes sense. Altcoins. Who's doing the business? Mana. Mana is holding that 800 EMA. Look at that. Completely down towards that wick right there. Happy days. They've come and hit that. Actually, let's look at something. Let's look at the totals chart for a split second. Wow. There's the totals chart. Total cryptocurrency across the board. Let's have a look at, with the exception of Bitcoin in this chart. Okay, so we got 3 hits to the low right there. Total market cap for the altcoins right there. Okay, yep, that's fair enough. Finishing higher than the previous zones. It's taken one zone here. So there's a lot of liquidity left for them to take. All right. Quite frankly, ladies and gentlemen, this does look like it's formulating a very big pattern. If we look at the total market cap chart itself, a huge W formation is in process on the 4-hour time frame. Absolutely massive formation right there. The behavior is consistent with a big W formation, but you have to sit tight and wait a little bit, because they may need to bring it down a little bit more and then initiate the shifting out of the zone in this area right here, ladies and gentlemen. So you're going to be seeing a lot of activity happening in this area right here. All right. But you can see moving averages across the board on the crypto market chart itself. There are many coins below the moving averages. So we are expecting price to come back into the fray to regulate things. It's when it comes back towards the moving averages where you then make the decision and say, OK, is the momentum favoring higher prices or lower prices from this point? Just look at what happened to Bitcoin. OK, on and in and around the psychological low. All right, just look at this. What have you done here, bruv? All right, so this is on the 4-hour time frame. All right, drop onto the 1-hour time frame and you can see the psychological ranges right here. Look at that. Psychological low, stopping volume. Guys in the masterclass today, look, stopping volume candle right there, appearing at the highest point. Yep. At the same time, recovering the previous red vector candle, but leaving money on the table. Because at the 50% retracement of that vector candle right there tells me that that's the point when the candle became a vector. So the orders started to get busier as the candle was in its halfway point of being completed. That's why they effectively pulled price back up there to activate those orders. They snapped price back down and dropped and rejected the psychological low. Now remember, at the start of the week, ladies and gentlemen, we were paying attention to the fact that they keep on staying in this psychological range, but they keep on building shorts above the key notable areas within the psychological range. Remember, they set their spread for the rest of the week. If they can't break above the psychological high on notable interest, it means they're preparing to drop it. Look at the hits. 1, 2, 3, broke down 4, came back up again, broke down 5, last attempt, and then they retraced it back up and realized the continuation from this zone and absolutely ripped the chart to pieces. The psychological low, guys, and the psychological high are the points in the chart where the market maker sets his spread for the rest of the week. Okay? If you go in the community post on the channel, ladies and gentlemen, you will find that there are posts on there which highlight the actual psychological high and low for Bitcoin for the past, God knows how many some days. All right? If you mark off all of those psychological high and lows on the chart for every week that passes on that, you will start to see a common theme with the way the market works at these zones. These are the true support and resistance points. All right? Not ones that you think are support and resistance. This is establishing the first high and the first low at the start of each trading week. Don't come to the chart and be like, yeah, this is a nice little point of support and resistance. Or, yeah, I'll draw off a line here, okay, and hope that that's okay. Let me just check it out with my guys on TikTok to make sure that they're okay with it. Yeah, that should work. Okay, 47,075.69 cents. Awesome. What is that? Please, bro. Please, man. They insult the game. They insult the game, man. No wonder. Oh. Anyways, ladies and gentlemen, I hope that puts things into perspective for you, ladies and gentlemen. Okay. But the XRP wick. Yeah, let's actually have a look at XRP for a second. Here we go. See, the great thing is, right, is XRP's wick. You know what? XRP, man. I mean, that'll be very painful for XRP to get all the way down there. Very painful. Very painful, man. Painful. What am I talking about? Mad love from Miami. Happy days, man. Mad love and respect to all of you. 1,500 of you in the room. Mad love and respect to every single one of you. And make sure that you join tonight's live. So subscribe so you can get the notification tonight, because I always go live in the evening to summarize the activity of today. All right? So just please be sure to join the live later on tonight, guys. Time roughly about 10 o'clock at night. Usually about half 9, 10 o'clock. Frankfurt, how you doing? Oh, my days. Tina, bro, been asking for Polkadot for weeks. Oh, my bad. Let's actually have a look at Polkadot. Okay, then. Let me just go over to the watch list where I'll have to search for it, because there's no point in me even having that watch list. Here we go, Polkadot. Right. Okay. As you can see, guys, we've got a massive pattern in front of us. But there's still so much time to wait yet. Okay? We're at the start of the year. You can see a big formation play. All right? But there are patterns within patterns and cycles within cycles. Look at this. We've got a weekly cycle on the way. There's still liquidity for them to grab. And we need to be really mindful of that. Don't be too hasty to get in. Okay? Let them bring the flavor to you. You weren't buying when Bitcoin or DOT was up here. And you weren't buying when it was up here, when people were thinking this was the point it was going to explode. So why would you want to wait until this point right here? What, because it's cheaper? How do you not know it's going to continue down to get even more cheaper? Do not make the mistake of thinking that the people that are moving price, or the whales that are accumulating whatever it is that they're buying, okay, don't ever think it's cheap enough for them. They will never accept as one zone being the cheapest point, because there will always be somewhere that they can get it cheaper. And that's what you need to keep in your mind. So be cautious again with the idea of the dip. Be very cautious. Okay? Do market makers change their strategy depending on whether it's a bull or bear market? Nope. There are two phases. Retail traders, okay, and everyone across whatever social media platforms, right? They focus on bullish cycles and bearish cycles, all right? In my opinion, from what I understand and from what I have been told, market makers focus on two phases, markup and markdown, because the markup phase is where you guys are buying and they're selling, and when it's dropping, the markdown phase is where you guys are selling and they're buying, okay? My goal is to try and establish, where is the market maker right now? Is he preparing for a markup phase whilst finishing a markdown? Or is he preparing for a markdown phase whilst finishing a markup phase? That's all I care about. And why don't I get emotional with it? Because bullish and bearish are emotional triggers. Markup and markdown phases are not emotional triggers. It's just telling me the flow and relationship of money and the momentum behind it from one point to the next. Which is more productive, which is going to keep you more sane with your trading. The bullish one or the bearish one. Bullish and bearish were only relevant in the stock market, okay, to gauge traders' sentiment 100 years ago. And they're still applying it today. And the same people that are talking about it are the ones that are setting people up to lose with it. Everybody understands when bulls are, bears stand up before they drop, before they attack. The bull drops before he rises. These are the tricks, man. You got to be careful, guys. And I know there are a lot of people that are new to trading and coming in, like, you know, going to Amazon, picking up a book off Amazon. Yeah, man, I read my book off Amazon over the weekend. Happy days. I'm going to start crypto trading, man. Happy days. Let me find a couple of guys on TikTok. Yeah, baby. Draw some support and resistance points. Happy Super Mario flags. Where are my Toblerones at? And then they're in the game for 5 minutes. And then they say that the game's bad. This is an art, ladies and gentlemen. This is a beautiful game. It's the most liquid game in the world. Right? And everyone's had their attempt at it, but everyone's doing the same thing wrong. That's my 2 cents on it, ladies and gentlemen. That's my 2 cents. I mean, what? My days. 15 years altogether involved in trading. You know, people see Bitcoin drop, they call it a crash. We call it a blip. You know, it's not a crash. Anyway, that's another story. That's another story. And, you know, if listen, this channel does challenge conventional wisdom. Right? It does challenge it. Yeah? Why do you think price stops at this point? What, supply and demand? Is that what you guys understand supply and demand to be? Because there's too much supply here. There's no interest with traders. They don't want price to go higher. The moon boy doesn't want to see Bitcoin or DOT rising to the upside. No, he wants to make he wants to be conservative with his approach. Man, shut up. Supply and demand. Supply and demand works in retail. It works in fruit bars. It works in coffee shops. It works there. Not in this place. This place it confuses you to believe that it's supply and demand. I'll tell you what it is. Market maker has been marking his shorts to the upside by inducing traders to believe that price is getting ready to explode to the upside. He's inducing them. Look at the green vector candles pushing price up, up, up. Okay, we've got continuations to the upside. Happy days. Moonboy's getting excited that his actual coin is now rising in value. He's buying, he's buying, he's buying. Market maker is using the liquidity for the guys who are buying, and he's building his shorts at the same time. Remember, you can only buy if someone sells to you. Who's in control of the move? Not the buyer. No, that's where your bullish, bearish behavior comes into it. You make yourself believe that when price is rising, it's because the bulls are in charge. No. You can only buy if someone's selling to you. So who's in control? The seller. So when I see price rising, I'm expecting them to go down. And when I see price dropping, I'm expecting them to come up. Because that's the nature of the game. That's the economics. That's the true concept behind trading. You can't buy if there's no one there to sell. Your order, where do you get your liquidity from in your profitable position? Where does it come from? Where does your liquidity in a profitable position come from? It comes from the contract that has been set up against you. That's why I say to you, always pay yourself, because the order that's been set up against you has the pockets deep enough to sit through a massive drawdown, because they're going to just make their money back again elsewhere. But you're not in that position. Yeah? You need to pay yourself as often as you want. The reason why price stalls at the highest point right here is because if the market maker continues to allow the retail trader to buy and buy, he's now giving the retail trader an opportunity to take profit. So then that means his shorts that he's been building will then have to be built even further up. But by the time it moves up to a point where he wants to turn it, the retail trader would have got out and taken his profit. Now the market maker has to start over again at a loss, and he's not in the game of loss. He's not in the game of charity. That's the nature of the game, ladies and gentlemen. Supply and demand only works in retail. You got a guy who has a shop. He sells jumpers. He sells green jumpers, red jumpers, and blue jumpers. He opens his shop, all right? And he's got 5 of these jumpers. At the end of his trading day, he sees that he's got no green jumpers left, 3 yellow jumpers, and he's got 2 blue jumpers left. Supply and demand would say that he needs to stock up on green jumpers because the demand has taken over the supply. But you can't come to the game of trading with that same logic because it doesn't exist. The basic economic rule in the game of trading is when someone buys, someone has to sell. And without a buyer, you don't have a seller. Done. Have yourselves a lovely afternoon, ladies and gentlemen. It has been a pleasure to sit and chew your ears off yet again. I want to thank you all for passing through. Be sure to like and subscribe, ladies and gentlemen. All I'm saying to you is just proceed with caution on the idea of buying the dip. You need to wait for price to regulate because we have had an explosive move to the downside. The New York market is now fully open. We've got the futures market opening in 20 minutes time. Just proceed with caution, ladies and gentlemen. Don't act too soon. Okay? Have yourselves a wonderful day. Take care of yourselves. Peace.